Okay, let me see if this is working. Okay, audio is working. I'm not actually broadcasting. Yeah, I think I'm broadcasting. All right, folks. So, good afternoon, or should I say good morning? We are 15 minutes away from the open of the London market. All right, guys. So 15 minutes away from the London market. Let me just shift to. Let me just use another platform, and let's take a look at the daily chart. So, what do we see? Looks like across the board weakness for the US dollar. Um, Gold picked up yesterday and looks like we're trying to get a follow through today. So, what is this? Yeah, it looks like dollar dumping story is back. Looking at I'm looking at crypto, and you've got Bitcoin pushing up again. Also have Ethereum pushing up today. We don't really have a big move as far as US equities are concerned. Okay. For much of the week, we've been consolidating in US equities. I actually find that very strange, given that there was a drop in the, or rather, there was a, what do you call this? There was an Moody's lowered the credit rating of the U.S. last Friday. I would have thought that that would have caused some concern for financial markets. Although these things tend to impact the bond markets first before they impact equities. Typically, the bond markets would have a lead in responding to credit rating changes. Now, do we have anything in today's calendar that will move the market? Well, let's see. Today's Wednesday, and okay, we've actually had some numbers already released. We had CPI data from the UK released earlier. They came out firmer than expected. Annualized CPI was at 3.5 against a 3.3 consensus. And when we looked at the chart, we did see our GBP really pushing more against the greenback today. But is there anything from the US that we should be concerned about? And looks like we don't have anything that I would consider to be critical as far as the US is concerned. For the rest of the week, what do we have? Flash manufacturing numbers on Thursday. So nothing too important as far as US data is concerned this week. I would have expected that because there was a lack of catalyst, market would have stuck with the previous structure, but obviously we've had some changes. We had a solid, no, I wouldn't say solid. Should I use the word solid? Okay, let me use the word solid. We have a clear dollar dumping happening through much of the week, or rather through the early part of the week, and we're trying to follow through on that. All right, so having said all of that, let's take a look at charts, and let me start by taking a look at the euro. Okay, sorry, wrong platform. Let me shift. Let's use CTrader for this. Oops, all right, so what do we have for the euro? Let me go big picture, dailies. So this week's price action appears to have given us a change in structure. Why do I say that? Because previously we had our euro consolidating through much of last week, but now we've had bullish candle Monday, Tuesday, Wednesday, enough so that that consolidation from before is, well, it's been broken. We can now say that euro has resumed its uptrend. We've bounced off. We have a higher low from the daily, something that came from 61.83 retracement of this swing. Okay, so sentiment is bullish. I guess the big question now is it a good idea for us to just jump into this market, given that we're saying that we are bullish in euro, we have bounced off 61.85? And of course, my answer with that is not really. I mean, if you look at the range for today, low is at 1278, high is at 1353. So we've had about 70 pips of price action already. That the upside seems to be limited for me. If I look at the chart, notice that we have this consolidation highs around here. That's about 1387. Okay, so there's actually plenty of room. 1387 from the current working rate of 1340. You're talking about maybe another 47 pips upside. But what is my average daily range these days? Let me pull up the ATR indicator. And what's our average true range? And the ATR seems to have dropped. It's about 95 pips. Okay, so 95 pip ATR. Price action is already at 70 pips. So yeah, it does look like we don't have a lot of upside. That I wouldn't be too, no, I wouldn't just jump in and go long because this chart is telling us that the upswing has resumed. So sure, the upswing has resumed, but timing would be critical if we want to join this. All right, now let me go intraday. What do I have if I look at the intraday charts? So let's go hourlies. And what do we have from the hourly charts? We see that we've been consolidating, at least from the last 3 hours. We've had an attempt at a breakout. But look at this. Our current candle has that long, this is our current candle. And look at how long the wick is. So there seems to be loss of momentum. We have 7 minutes until the close of the hour. So anything can happen with that within that 7 minutes. But there's a hint of lost momentum for bulls here. All right, so no immediate buys, it seems. All right, so what would be good places for us to look for buys? If we look at this from the perspective of the charts alone, from price levels alone, then these highs from Monday would be a good idea. That's slightly under 1290. Let me get the exact figure. Exact figure for this is at 1288. So that's a breakout point. 1288 is your breakout point. That could be an entry. But let me drag Fibonacci's. Okay. And if I do Fibonacci's, by the way, this isn't really how you should be doing Fibonacci's. It's a bad idea to put your Fibonacci on an active candle. And we placed our high for the Fibonacci's at the highs for the day, which is an active candle, but I'm forced to do so because there's no other reference point. All right, so given this, what do I have? 50 Fib retracement is at 1288 as well. So looks like this might be a good idea. Highs from Monday, breakout point, and then 50 Fib retracement. Of course, ideally, I would say 61.8 Fib would be the place that we'd want to jump long into. All right. So we are bullish. We don't have the nice price level that we'd like to be in at this point. I would say look at the breakout point from Monday's high, 1288. Find yourself with hammers and dragonfly dojis around these levels, and I would be willing to take a risk at that point. I could use a tight stop, okay, either below our 61.8 fib. 61.8 fib is at 1273, so I can say Let's place our stop loss at 1270. But again, our entry will be driven by the kind of candle that we see from the price levels that we want. Just because you are at 61.8 fib or you are at 50 fib retracement does not necessarily mean that you should buy immediately. Let us look for price action telling us that, okay, this is beginning to go back up again. So now is a bad idea to chase the upside, given that average daily ranges would suggest our target should be around 1370, 1360, and that's pretty close to where the market is right now. So I don't want to chase 30 pips and have a big downside. Okay, so look for better prices, but look for candlesticks that tells you the timing is right, that tells you momentum has changed and we are once more resuming the upside in the intraday chart. Don't get me wrong, we are bullish as far as the daily scale is concerned, but we do not have the right price to just jump into this at this point. What about selling it? Well, the thing is, let me go back to the big picture. The big picture has us with an end of a retracement, an end of a pullback. Okay, so I'm not keen about selling this. Maybe if it were like close of European markets already, okay, maybe if it were already about 1600, 1700 GMT, and I can find myself with, if the time was 1700 GMT and I find myself with a candle like this, I could use a break of this consolidation low as an excuse to sell. But right now, we are just seeing the open of European markets that I won't be keen about selling this. Okay, not at the moment. I don't want to go against this resumption of the uptrend when it's just the open of the European markets. But let's see. Okay, one thing about me is that I can always be flexible. If there's enough reason to say, okay, we can short it, then I would later. But now is not the time for it. Okay, so let me look at something else then. If we're not going to sell this, let's take a look at something else. How about gold? We were saying that gold is looking impressive. Should we join the buys for gold? Here's our gold chart. Okay. My main concern looking at this gold chart is just where are we right now? Let me see. Sorry. Okay, there's room because I was thinking that we might be nearing a top, but we're not. We have more room to go. So what's with gold? Gold gave us a bounce of 61.8 fib. There's our channel. Average range for gold. Let me see. Let's put an ATR. Although the thing with gold is that it's a very active chart. It's a very active, rather not active, but it's a very volatile chart. Okay, there were days where the range of gold would have been worth $10, but lately the range for gold prices is what? It's about $84 of late. So yeah, $84 range lately. But as we said, the range for gold seems to be very volatile. It could be as low as 10, could be as high as up to 100. All right, knowing that, what do we have? Low is at 32.85, working rate is at 33.17, high is at 33.20. So if you're talking about an 80 pip per average daily range, then an $80 ATR, then you've only moved about 45, so you've had half of the day's typical range. We are at the highs for the moment. All right, can I jump long here? We've had the close of the previous R, so London markets are now open. We don't exactly have an overly bullish candle from the previous R. Okay, this is the previous hourly candle. That's not exactly very bullish. Yes, you have a long tail, but you have a small body, barely broke through the previous high. So this seems to me like it's a question of, can I get this from a good price? We know that gold still has some upside to it. When things go wrong, whether you're talking politics or economics, gold is refuge. Okay, gold is it's the highest rated haven asset. So we'd like to join that. We'd like to join this push towards historic highs again, if we can get there. But pricing will be an issue for us. Given that you actually have a bit of a consolidation in the intraday charts, then I would say, sure, let me pick it up from something like 32.90. And I would consider going long from this consolidation floor. That's out of late New York trading, Asian session. Remember that unlike your currencies, gold tends to be traded from different market centers. Can be traded in Hong Kong, can be traded in India, it can be traded in Dubai, and then of course London and New York. So given that its trade is typically distributed, each of these consolidations are points of liquidity for me. All right, so no immediate buys. Give us better pricing from 30 to 90, and we will consider going long in our gold chart. Our objective in the near term would be to try to get to this channel resistance and then get to the earlier highs for the month, and then go look for historic highs at 34.98 eventually. So a bit of patience, guys. Just look for better pricing before doing anything in gold. Let me take a quick peek at euro given the new R. All right, so indecision candle from the previous hour. Now here's the thing that I was saying, that I could actually consider shorting this. If we have a break of this indecision candle, then that tells me there might be a bit of unwinding happening from earlier, from the move from Europe. Let me put something here. Let me put an exponential moving average, 24 hours. So I'm looking for the possibility of mean reversion happening here. we do not have a catalyst for strong price movement. So yeah, at this point, I'm looking at the possibility of shorting instead. Just a quick short, get to your exponential moving average, and then from there, maybe bounce off that EMA again. So how do I do that? Well, I normally would want some momentum, so I'll use a sell stop order. Let me modify that. Three lots. I'll use. Wait, what happened there? Okay. Let me just see our viewing options. Let's put their positions, orders. All right. So I'm going to use a break of the low from the previous R, slightly lower than that, as our entry. Stop loss for me would be the high. And my target, well, again, we're using, well, our objective would be to try to get to the exponential moving average. Let me adjust that a bit. So, we don't exactly have catalyst for this, but we've seen an indecision candle from the previous R saying that momentum for the upside for now has stalled. So there's a chance that prices may pull back. Let me go intraday, really intraday here, 15-minute picture. Excuse me. Now, there's a risk, folks, that we could get hit, we could get triggered, and then we don't really have momentum for the downside. Again, overall trend for Euro is actually bullish. The safer play here would be to just wait for better prices, as we said, and then just buy from those better prices. Better prices being your 50 fib retracement area around the 1288, 1290 region, breakout point from Monday, or rather Monday's high. Okay, at 1288. So, okay, you know what? I'm thinking that I should really be teaching you guys how to stay in the market, stay in the game for long and not be aggressive. So folks, much as I want to join this sell side at the break of the low from the previous R, I would adjust our plan. I'll stick to the original plan. Let's just wait for better prices. Let's just wait for a bounce of 50 fib with a stop loss below 61.8 fib. All right. Looks very tempting for me. This is likely to show us something like this. This market could show us something like this. Indecision candle. Indecision candle, and then pulled back to the EMA. This is something that's likely to happen here. But again, part of the task or part of your job when you're trading is to look for the best trades. Okay? To look for the higher probability trades. And although this is likely to happen, the risk reward isn't so great. That it is best for you not to do this. And if it's best for you not to do this, it would also be best for me to just play it safe. I'll remove that. That was really tempting. But I removed the order. Again, this is likely to see some mean reversion. You have the elements for a mean reversion. But the safer course of action would be to try to pick it up from here with nice hammers and dragonfly dojis. You know what? I'm thinking we need some form of EA that would monitor for bullish candles at a certain price level and then just place the order once those bullish candles kick in. All right, so mean reversion seems to be starting already, guys. We removed our order. We said that that's not a very good risk reward trade. Our risk was about 1,100 and our reward towards the pullback point was only around 800, not even 1:1. We will be disciplined in trading here. So yeah, skipping on this tempting mean reversion. Now, when does a mean reversion trade happen? Normally, mean reversion happens when you've had a nice swing and then suddenly you have indecision candles right at the time when you've got more players coming in. Because the story here is that there was no volume during the surge, and then once volume comes in, it's enough to quash the bullish expectations. It's enough to stall, to stop even the upswing and force some players to get out, thus a pullback happening. So guys, again, mean reversion will likely happen here, but we're not going to jump into that. Let's just wait for that better pricing and then take the buy side from there. This is really frustrating. Honestly, I'm really tempted to take the shortcut, take that, I don't know, 20 pips, 30 pips mean reversion that can happen here. But that's a bad risk reward, and I should not be teaching bad practices. Okay. All right, folks. So let me move on because this is really frustrating me right now. It's painful not to do anything there. So where can I go? Let's look at GBP. So we had strong data earlier from the UK. We have strong inflation data. And if you have inflation, what does that mean? When you have inflation numbers coming out strong, normally inflation means that the currency involved, okay, the currency of the country where inflation is being experienced will likely go up. It increases in value because the central bank will be forced to either raise interest rates to quell the inflation. Let me explain that a bit. Let me just explain that into detail. Inflation is bad because inflation says that there's too much money going on. Actually, inflation occurs because the value of your currency is deflated. Okay, so if the value of the currency is deflated, okay, meaning it requires a lot more of the currency to buy a certain good or item. Now, if that's the case, central banks are forced to respond by, to control inflation, they respond by trying to siphon off the money in circulation. So think of it this way. Say that, in this case, this is the UK. We're talking about the UK economy. Say that this circle represents all the money, all the pounds that's circulating in the UK. And because there's inflation, the central bank will now have to think about how do you reduce the inflation in the economy. Okay, you do that by decreasing the amount of money in circulation. And to do that, either you raise interest rates or you force your banks to keep more money on their vault, lower the money in circulation in the economy. So what about GBP? Looks like initial response to the data is over. Okay, let me see this. Let me go in. Let me take the big picture first of GBP. So big picture, where are we? We are at levels. We've actually tested levels last seen from August last year. Okay, back when Biden was still president in the US. What else can we say about this chart? Looks like we've had a big day already. Your ATR is, let me see. Your ATR is about 103 pips. And we've had what? Lows at 1337, highs at, lows at 337, highs at 346. So we've actually exceeded average daily range. And you're trying to push past highs for the year. And looks like we're failing here. So big picture, we can say that GBP has been consolidating through much of last month and this month around this region. We have just been given a good excuse to say break higher with the CPI numbers earlier, but we don't seem to have a follow-through. When I go intraday, what am I seeing? All right, so look at this chart. Here is your knee-jerk response to data. Market was not able to hold on to the new high. It's now pulling back inside the previous, the breakout point. Guys, this is a clear example of mean reversion. Let me go even more intraday. Let me go 15-minute chart. So look at this 15-minute chart. This is when data was released. Let me just add something here. So folks, this is when data was released, but after having exceeded average daily range, within 30 minutes from the release of data, you saw the peak, and market has reverted to previous price levels. Now, why am I pointing this out? I'm pointing this out because we retail traders have a tendency to chase economic data. We have a tendency to see data, oh, it's good, let's go buy. It's bad, let's go sell. And normally what happens is, when you buy, you get executed here. Sure, you tried to enter the market here right after the release of data, but because the market moves fast, you find that your order gets executed right at the top or right at the bottom. And what happens? After the first 30 minutes, markets go back to where it came from. So what I'm trying to point out here, folks, is that this thing happens a lot to retail traders. It is something that we should try to avoid. And professionals, they do this. They do mean reversion. Now, of course, the pros, they've got a lot of tools that they can use. They have data that that looks at the deviation from the forecasted value. They have data that looks at how much is the usual number of pips, how much is the usual reaction given a certain amount of deviation. They can do that. They can do correlations on this. Now, retail traders, unless you actually are, you have the time to do this, we tend not to be able to do this. So one thing that I would point out is, okay, if you don't have the historical data to check whether mean reversion should start happening again already or not, a simple way of looking at things is ask your ATR. If you're already exceeding average daily ranges after the release of data, then think about, okay, I am well beyond average daily range. So if you're well beyond average daily range, the moment that your lower time frames tell you that, okay, it's lost momentum already, maybe it's reversing, you should seriously consider the possibility of mean reversion, of prices going back to where they came from. This is where prices were before data was released. And here's what happened. 30 minutes after, or rather, after the first 30 minutes from the release of data, we pulled back to where prices were. We have mean reverted. So if you do not have the historical data, if you do not have the correlations on how much a deviation from the consensus forecast would lead to, or what's the maximum excursion, what's the most movement that can be expected from a certain amount of deviation from data, then your next best choice is to just look at average daily range. And if you're in excess of that already, look for signs that momentum has been lost. All right. Now, the question for me is this, or the question that I have for you guys is this. We've pulled back to where prices were from the release of data. Is it a good idea for us to go long here? Remember that data was actually good for the UK. Okay? Data was good for the UK. And where are we right now? As we said, you are back to where prices started. And when you look at the big picture, it does seem that we are in the process of moving to price levels last seen in 2020. Okay, so you know what, given that last time we were above these levels was in 2020, 2021, we should be playing this safe, meaning I would like to have a daily close first above the year's high. Okay, the year's high is what? Let me see this. I would want a daily close above 34.23 first. Sorry, I have it. Here's the day. Here's the year's high, 34.43. I'd want a daily close above 34.43 first before I can become aggressively bullish about our GBP, because this is a scary price level. We need to confirm that people are really bullish, and that confirmation will come from a close above the year's high, a close above 34.43. So there is an attempt at pushing past the highs for the year. There is an attempt at getting out of this consolidation from the past month. We have the data for this, but given the levels, I would much rather have confirmation before thinking in terms of, let's see if we can get to 3,500. Okay. By the way, always look at those hundreds, 500s, thousands as psychological price level. So I look at 3,500 as our target, but again, give me the daily close first. Intraday, if you want to buy this, it's just not a very good risk reward. Okay, it's just not a very good risk reward, guys, because downside seems to be too big for me for comfort. All right, so yeah, intraday you can consider going long. You have enough argument and you have a good price from which to buy this. Okay, if you want to play it on an intraday scale, maybe you look for a 15-minute close first. Let's see this candle closing. Let's see this giving us a piercing pattern. Sorry. So let's see our candlesticks give us a piercing pattern. Piercing pattern means that I should be closing here for this latest 15-minute candle. Okay, that to me could be a signal that, yeah, I can buy this now. But if this turns out to be another indecision candle, small body, long wick, long tail, then there's no momentum. There's not enough momentum for me to say timing is right. So sure, we have a good price, but the question is it the right time to go long again? And the answer to that is, it depends on the close of this candle. So we're actually about 2 minutes from the close of the candle. So let's just see. What happens? Well, looks like we may get that close after all. Let me see the risk reward for this, folks. So one thing with so if I buy this, I want to risk about here. My objective would be to get to here. Let me limit my risk. I want to limit my risk to just about $300. Well, not 1,300. Okay, so let's see how this latest candle closes. We want to see a piercing pattern. Okay, we did not get a piercing pattern. All right, so yeah, I mean, I'm attracted to the notion, but without a clear signal, not taking the trade. Before I go, folks, let me take another quick look at Euro, see where we're at. All right, see what happened here? So we thought that, okay, we wanted to see a pullback. Okay, let me just, we wanted to see a pullback towards the moving average. We said that, you know what, better to just wait for prices to get there instead of just entering here. Although we tend to think that we will get that pullback eventually, we were unable to sustain that bearish momentum. So sometimes trading is a waiting game. Trading is about having the best prices. A decision not to enter the market is actually a trading decision as well. So wait for the best prices, and let's just go long from 1288 or 1280. All right, folks, so I guess that's it for now. Thanks for joining me, and I will see you on Friday.